Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! It is Fed Day. Geez, we've been talking about this since last week. It is now the 19th of June. Time just flying by, man. This month just disappeared so quickly. But actually, we got kind of a cool program schedule here for you today, considering it is Fed Day. We've got a nice big dose of fundamental analysis for you today, so super stoked. But let's do some introductions. Who's on the panel today? Of course, driving the bus, we got the mayor of Vienna. Alex, how you doing this morning, sir?
Hey, Brian, I'm just here for my tutorial.
All right. We were joking about people showing up for their tutorials earlier on, so kind of funny. But Alex is getting ready to relocate to the west coast of North America. Wow, big culture shock change for him coming. So you were at the doctor's making sure you got a nice clean bill of health today, correct?
Yes, sir. Colonoscopy and all of that.
Oh, that sounds like fun.
No, I'm just kidding. Just a regular blood test.
All right. So we've got the mayor driving the bus here, and we're going to need to try and end, of course, on time. I've got level 3 group tutorial session today, Wednesday. So I think that's today. Yeah, I think so. So maybe I'll refrain from chit-chat too much. And considering Fed Day and all our talk yesterday about how we should just cool our jets ahead of that event, I think it makes sense. The whole market's sort of coiling up to that. But as I had said earlier, we have a special presentation for today. Mr. Fundamentals himself, Jamie, has pulled himself away from the Italian Riviera. I don't know. Are you still hanging out down there these days? I know you were for a while.
No, I'm back in the UK now, but I'm actually going to Italy on Sunday.
So, on Sunday. There you go. So
there we are.
Anyway, good morning, sir. Welcome back to the broadcast. How are you today?
Guys? I'm absolutely great. Ready to rock and roll.
Good. Absolutely.
Let's do this.
Great. I love that. Whenever we talk to Jamie, he's always top of the moon. Top of the moon? I don't know. Anyway. All right. So without further ado, we could just do a quick little broader market overview. It's interesting as we're sort of getting ready for Fed. Market has just parked itself. I suppose we could probably look at sort of bigger picture. We've been talking a little while about us rallying back up into reload zones, testing the top of value, testing the original M top of the market. And I've been, it's actually interesting. There was one news article that I was reading this morning. I don't think I tweeted it out, but I was tweeting out lots of sort of talk. I think the odds right now on the floor are for about a 30% chance for a rate increase today. I know that Thomas and I have been bantering back and forth. Does the Fed raise rates? Do they sit on pause? But gee whiz, there's lots and lots of debate in the marketplace. To sort of speak to sort of Thomas's sort of thinking, I actually did up a really interesting graphic yesterday. Of course, this is our old school, used to be called the TED spread. Now that we're following Fed fund futures and not T-bills anymore, I suppose we should call this the Fed spread. And a really good sort of conversation about, short-term interest rate policy and Fed policy, corporate rates, basically for the past couple of years. And you can see how at one point the Fed is this line right here. They kind of fell behind the curve, and the spread was starting to widen, and people were getting really worried about credit crisis and stuff like that. Fed started to get pretty aggressive, raising rates to the point where they sort of got back ahead of the curve. And then you could argue here they actually started to get caught up with the curve, but now actually ahead. And what I would actually say, they've actually broken the back of inflation here now. as that spread is narrowed to the point where we might even potentially go negative on this spread. Never seen that before. So we'll see how it goes. But I sort of put out this message, can we make a case that the Fed maybe has maybe done enough? I certainly don't really expect them to raise rates. I think that's definitely 100% in the market. It's just really a question of if and when do they actually start saying that they're done raising rates, and they can actually think about starting to lower rates. We'll be watching the yield curve, and actually, I would actually argue that this yield curve is still relatively healthy, other than the fact that the 10s, 5s, and 2s are underneath the Fed rate, but the spread between things like the 10 and the 30, and even the 10 and the 5s and 2s is still relatively healthy. So, and of course, the 30s is still well above even the Fed funds now. But I think, our classic TLT tip spread, as Thomas has been sort of telling you recently, the Fed, I was like sort of targeting ideal inflation rates. And I think they really wanted to try and get the market back up to here, raising short-term interest rates. But unfortunately, the economy just, especially with all the political wranglings, trade wars, all that kind of stuff, the market and the economy just couldn't handle it. And we're starting to see deflation start to come back into the system pretty aggressively here. So that's sort of the backdrop. And of course, today is the Fed announcement day. Lots of humming and hawing going on in the market. I think to a certain degree, you can also see that in things like Bitcoin price. I like to follow just the markets, the major markets. Here is Bitcoin, of course, for our community, utmost significance. You can see the triangle that's forming here. And if we start to crap out here, then, hopefully everybody can see M's and stuff coming in. So it shouldn't be shocking that if M's do start coming in, we start actually trending lower in earnest. You can see the W's that form back here in early June. Keep in mind, this is a 4-hour chart. And I'm looking at these BitMEX forwards here. So, if we do M out here, then, nobody here should go, well, that's a surprise to see Bitcoin price coming down. But at the same time, too, you can also see the gold market is also putting in that very similar triangle-y type formation. And then on the flip side, the oil market is also consolidating quite nicely here. And then here's the stock market itself, just sort of poised, waiting. I think everybody's just sort of sitting there waiting. So on balance, and, of late, I've been really interested in just running the little three thumbs algo system that Sin and I put together. And I see that the algo is sitting there going, nothing to do, no force. Everybody's just sort of sitting, waiting. Nothing's trending hard anywhere right now. So with that said, I think it's probably a good idea for us just to cool our jets and let this event happen. We also have the Bank of England tomorrow with their rate policy. And we also, of course, crypto related, we've got a big bombshell that could potentially be dropped tomorrow as well with that. And I always get the acronym wrong. Is it FDMA or something like that? Somebody correct me. The
FTAC, I guess, Financial Action Task Force Committee.
All right, there you go. Thank you, Alex. They've got their big prognostication coming down the pike tomorrow. And if I'm not mistaken, I think also, too, tomorrow's kind of D-Day for the Americans on sites like Binance and Trex, isn't it? I'm not quite sure.
Yeah, I think so. The date for the Financial Action Task Force Committee is the 21st, so that's Friday.
Right. Today's Wednesday. I keep thinking it's Thursday. Sorry about that, guys. So one day off there. But long and short of it here, got a whole bunch of fundamentals. And actually, like I said, we've got Mr. Fundamental here today to give us a nice presentation of what he's seeing with the broader economy. So, consider the latter half of this week a ton of eating your vegetables. Lots of fundamentals. Level oneers, just go slowly with all this. Try to absorb it. Try to digest it. It's going to be a lot to take in. But the long and short of it here, we have a very simple rule. I'm sure Colleen could probably tell you it. How long do we have to wait until after a Fed announcement before we can actually start believing what we're seeing in the market? I don't know if anybody can even run it. 1 hour? Hour. All right. Well, 1 hour. And of course, nowadays, they even have like a nice little press conference right after the Fed announcement. And that often takes that an hour anyway. And even DeBear was sort of saying recently, because of all the other fundamental shenanigans going on in the market, like I said, Bank of England, all that kind of stuff, it might be a good time to just let the entire dust settle. Now, having said that, I think there are some really interesting ideas out there, and one I'll give you today that caught my eye that I've been watching for quite a while here is this overstock. The interesting thing is if we do a 52-week range of this, you can see how high the stock was last summer. So I actually don't think it's unrealistic to look for, 6-8 months down the road, a nice rally up to test value high here. Wouldn't surprise me one bit. And is there any letter of the alphabet that's come in here that we haven't seen recently? Hopefully everybody should go, holy geez, that's a W. So if you are interested in playing, to a certain degree, Overstock does have a crypto component. So you can look at it from that perspective, or, just simply, a tech stock. It is definitely an interesting idea to chew on. And I'm watching in particular the January $20 calls. Right now they're about 65 cents, and I'm willing to pay 50 cents for them. So, of course, Brian, is a cheap ass, but very interesting looking trade here. And like I said, a nice rally up just to test this high of $23 will make that option worth like $3 or a 6-bagger from 50 cents. So there's something for you to chew on. As for the rest of the broader economy, I'm going through my list on a daily basis, just watching for breakouts and breakdowns. The gold stocks are looking interesting, so I'm keeping an eye on that. Alio was one little gold stock that we did get a trendline break, but we just haven't gotten any W's that are coming in earnest. The U.S. stock is still fighting with this trend line, so we'll see how that goes. The Canadian stock looks a little bit better. And then the other sort of idea that I was kicking around recently was these energy names are starting to look interesting again too. I should say this before we go any further. We've got the TRI meeting coming up here, the end of July, the big meetup here in Vancouver. When we were down in LA, we just sort of took it for granted that you could go down to the fishing wharfs and hop on a boat and have like 10, 20 people in your group go fishing. It turns out that doesn't exist here in Vancouver. And I did find a boat that said, we could take 15 people. But I went down and looked at the boat yesterday, and really, guys, I don't want you to be disappointed. So I think we're going to have to put the whole group fishing experience day on hold, which really sucked, and it really depressed me yesterday. So why am I mentioning this in particular? We did have a TRI SOF meeting planned for yesterday, but I was really depressed over what I saw, and I came home feeling really bummed. And I just asked Zach, since it is a Fed day today, and I didn't see any of our current positions doing anything, if I could take a rain check on that. So I take this stuff really personally, and I really want you guys to have a really good time here in Vancouver. So I was really, really upset at what I saw yesterday. So, if you are coming to Vancouver and you had your heart absolutely set on doing some salmon fishing, we can put together boats of the size of like about 6 people. So, maybe pop into the Vancouver TRI room. We can always do multiple boats, but everybody being on the same boat is just not going to work, which really sucks. So that's sort of the situation there. If anything, like Casey, I know that you really like to come out to those TRI SOF meetings. My apologies. Zach, if you're watching this later on, I let you down yesterday. My apologies. But to a certain degree, because today is a Fed day, I don't think it would have been too smart to put on any new positions today. So, and I haven't seen any of our current positions move egregiously. I did see your Casey's tea looked like it was about to rock and roll, but having said that, it backed off today. So no breakout today. Oh, actually, it's coming back now. But Casey's tea was looking really interesting yesterday. It really perked up. Heard a lot of chatter in these rooms about things like takeover bids and stuff like that. But okay, I suppose the only other thing that I'll mention here before we release the Jamie is just a quick update on good old Bitcoin. Of course, we had the algo signal fire the other day. So it spat up a nice little 2-to-1 win. If I can find the damn chart, it's around here somewhere. Maybe it's over here. I'm on a 5. Okay. Nope, that's not it. Oh, sorry, guys. Get your head on straight, Brian. Where the hell's there? It is. So, those people that are, trading Bitcoin, I think we had a really nice W breakout there about a week or two ago. I actually really like this algo because it doesn't take a heck of a lot of trades. I've broken the past, I've basically been back testing this real time though. For now, basically since December. And I do little 240 bar reporting periods. And you can see over this reporting period, we've only had one trade reported. But nonetheless, I'm really liking the results that I'm seeing, consistently spitting up what I would consider very good signals. So long and short of it here, had its 2-to-1 hit. That also happened to correspond with a bot setup. Move stop to scratch, move stop to trailing. I actually really do like the idea. The algo sells half of the position at 2-to-1. So you're going to start trailing your stops on the other half. So you would have had your original stop move up from scratch up to this low or just below this low. Made a new high, pulled back. I don't have a problem if anybody was in this trade with me on their remaining position. They now have their stops just below these lows because this low is slightly higher than that low. I suppose 3 high-low method, 1, 2, 3. 3 high lowers might have their stops just below these lows. But anyway, you shake it. I don't think that should turn into a loss. I don't know whether we're going to do sort of the crypto angle. Alex is telling me 10 minutes to 30 minutes after the hour. I thought I was just going to just sort of do a review of what I saw, and then we'll just let Jamie have the rest of the broadcast. Okay, does that work for you, Alex? I hope so. Okay, so with that said, that's basically all that was on my mind. The only other thing I suppose we could mention, it's kind of interesting to see, we were sitting in the lounge. Yes, we are into reload zones on ETH. Yes, we put in a double top. Yes, we did break down on the candle wicks and tails level. This low was 273. These lows were 272 and 272.001. So you could argue that there is an M working here. And as well, what I thought was interesting is if we actually change this to a clothesline chart, we also had a close that was below this close. This close here was 276.55, and these closes were 276.20. So technically there is an M working here on ETH. What's interesting when I threw this idea in the lounge, Thomas wasn't overly impressed with this M. He didn't really like it. But, I mean, an M is an M is an M is an M. We are at the top of value. And, of course, with all this sort of conversation about Fed, basically the market ran up against the top end of the range and now is just going sideways and probably waiting for the Fed to be done. And then we'll see which way we want to go. All right. So that basically is what I'm seeing in the market. Of course, with all the the uncertainty about regulators. I think it's actually not a bad idea for us to maybe just cool our jets when it comes to things like altcoins. I know everybody wants to, little old lady banging out doubles. It's so much fun when this market's hot. But if anything, there's so much fundamental uncertainty around this space right now. I'm really, really taking it very, very conservative in altcoins right now. And I haven't spent a lot of money in this space. And, it might mean that basically 2019 just is a non-event year for me in this space. That wouldn't surprise me. Every once in a while, all markets have to just sort of, just do nothing for a while and clean themselves up. And my hunch is, for whatever it's worth, that I'm just sort of cooling my jets here with regard to alt. So you haven't heard Brian talk a lot about altcoins and banging out doubles and all that kind of stuff. But I think it's just, we were even kind of joking, Joshua and I in the lounge last night, that we're to a certain degree almost in like post-traumatic stress disorder, PTSD, with regard to alts and Trex, because they just fucking take the wind out of our sails absolutely out of nowhere. You just don't know what the hell's coming next. And in those kind of situations, I'm not ready to go and risk new money in these kind of markets. I might recycle some of the money that I have in there. We've got, better part of 3/4 of a Bitcoin that I can nibble away on the Trex account for alts. But right now, I'm not feeling it there. So, better part of caution is always the better part of valor, as they say. Okay, so with that said, I think I've said my piece here for today. Jamie, and let's always check. Jamie, can you screen share?
Oh, whoa, let's find out.
I don't know whether we actually even tried to screen share earlier or not. So this is sometimes a battle with Jamie. So let's see whether he can screen share.
How are we looking there?
Excellent. All right. We've got Jamie ready to go here with his fundamental analysis, macro overview of the market. I always like listening to what he has to say. So take it away, sir. You've got the floor.
Perfect. Well, I hope everyone's been okay. Yeah, today I'll keep it nice and short and sweet. Make sure that you get the most of the level 3 mentor calls. It's crazy to think that now you don't have to do a whole group. I mean, we were really fortunate to be able to just have it ourselves, one-on-one. So yeah, just crazy how much this has grown. So we'll start with these. This is not financial advice, standard procedure. And then, so today, I have such an echo on this. So today we'll go over the future Prime Minister with everything that's gone over with Brexit. Oh, this is really bad. So we'll go over that. We'll see who. So we've had a ballot now of people who've been in and out. Today we had another ballot. So Dominic Raab is now out, but we'll go over that later. We'll then go over the Trump street yesterday, obviously going on about possible G20 meeting with President Xi. We'll then have the basically using news events for future ideas. So yeah, and then we'll look at the update on the Bitcoin fundamentals. So I was going to show that a couple of weeks ago, but I decided not to. So yeah. So we'll start with the UK government and Brexit. So far, we've had a couple of ballots. We had one today, which shows that Boris had the most votes with 126, which is actually more than the previous one. So to be honest, my hunch is that that picture there is your future Prime Minister for the UK, for the United Kingdom. So it should be a great photo op with Trump one day. So the main thing he's going to go for is basically that he will definitely make sure that the UK leave in October. But I mean, how many times have we seen that before? Let's be honest, we've heard that so many times. So the other politicians that are left, you've got Jeremy Hunt, Michael Gove, Sajid Javid, and you've got Rory Stewart. I mean, if anybody would knock them out, I possibly believe it would be Michael Gove. I mean, Jeremy Hunt possibly, but the difference is that everybody hated him when he was health minister. So we'll see. So I mean, what does that mean? So obviously you've got, if that does happen, so if Boris does get in, you can bet your bottom dollar that you'll probably end up start having some volatility within the United Kingdom's markets. Yeah, we'll see. I mean, there's so much going on in Europe at the moment, so there's just so many things to look at. Regarding the China-US trade negotiation, so this is perfect timing, I think. So obviously with the Fed meeting today, and then of course he said that he will meet Xi in an extended meeting on the 28th and 29th of June, which is when the G20 is. So I will definitely be looking at the VIX every day now until the end of the month and onwards. Meetings like this will definitely move the markets, whether it's the Fed meeting today or even people's presumptions of how things are going to be going with the meeting. I'm sure it'll just be one tweet and that's it. The VIX will spike. So we need to be aware of this simply because, you know, if you think that VIX is coming in and the VIX doubles and you've got a long short portfolio, for example, well, that's basically every portfolio in the world has just doubled. Their risk has doubled. So risk then needs to be reduced. So this is why these events are very, very important, especially if you're looking at your portfolio. So yeah, so then we're looking at the central banks. So regarding the central banks, ECB have started stimulus. Is this the fifth stimulus, I think? Or 5S? I mean, where to begin? So ECB stimulus, you've got Trump whining about it, but let's be honest, I mean, there's not many cards that the ECB can play. That is basically it. That's probably their last card. They've got nothing left. So, yeah. And then obviously we've got the Fed meeting today. Personally, I genuinely don't think. It was interesting to hear that you're thinking about rates going up. My opinion is I genuinely don't.
No,
Sorry?
not looking for rates to go up.
Rates
I
go
just
down.
don't know whether they're ready to start cutting rates yet.
Yeah. So, it's going to be quite interesting. Would they keep it on hold maybe for now? Yeah, like you say, what was it, a 30% chance? So
they have 30%. Well, I just happened to see one wire that said that the odds of them cutting rates today were at about 30%. But you know, it's a mug's game trying to guess this. You know,
yeah, without doubt.
Go to Vegas.
Yeah. So we'll have to see. I mean, if rates are cut, that's very interesting because we don't usually see it this early on. From a perspective of, you know, with the fundamental data that you're looking at, usually it's a lot later when you start seeing cuts. So, yeah, I mean, the data that we've seen in the last couple of months has been quite bad. It's come down sharply, and as usual, you know, the Fed is always late to the party. They always sort things out afterwards, after it's happened. So yeah, so we'll see on that front. Looking at the Bitcoin fundamentals, so I wanted to talk about this in the previous presentation. So I did update some of the fundamental charts that I was looking at to see if they will have influence from the last bottom.
Remarkable how that's last time you presented that to us back in the winter time. It was like, well, you know, we're right here where it should bottom. So look how it just took off, eh?
Exactly. So it's very interesting, to be honest. I mean, it's
All
always
new
difficult.
people, and who are crypto and Bitcoin enthusiasts, take a screenshot of that now. That is religion.
It's gone. So yeah. So for people who haven't seen this before, you've basically what it is. It's a time scale. But it's color coordinated for time until the next halving. So our next halving is on the 24th of May, more or less, next year. And as you can see previously, you've then had bottoms towards around 16 to 10 months of the halving. So we saw that in the last one. This one now, I mean, if this is the bottom, then there we are. It's been exactly the same. Obviously, we only have 9 years of historical data, so you have to take everything with a pinch of salt. But if you are going to look at fundamentals, I mean, someone's got to find them in the long run. So this is a good hunch for now. And then if we then couple that with the reduction in difficulty, so this is basically the blue line is your reduction in difficulty, and then the gold line is Bitcoin price. So the red bars basically showing that there's a reduction in difficulty, during basically bear market. So it's basically when mining companies have capitulated and they then basically the adjustment. It's not profitable for people to then mine. So we got that around the tail end of last year. We've had that couple of months, but then since there hasn't been a drop in adjustment difficulty. So if you couple the two, so if we go back around the same time, 16 to 10 months, so you're looking at the end of the year again, and then also coupling that then with the adjusted difficulty, it's quite powerful. I mean, it's done exactly the same as well compared to in the last cycle. So again, we'll see again maybe in another 3 years if it will prove to be important. But it's definitely one to have in the future as Bitcoin starts to get more adoption and starts getting more exposure. So yeah, finishing off and to conclude, obviously you want to use the news. So when you do use news, I don't mean Facebook releases Libra. You need to think about news that comes out will then have implications in the future. So if we look at earnings and they say for example, their earnings were 10% profit above. Well, that's already priced in anyway because analysts would have said that. I mean, if it was 10% above what the analysts expected, well, that will be priced in straight away. So it's about looking for moves. So, for example, we look at Iran with the oil tankers. Trump has now moved, is it 1,000 troops to America? If that then escalates, well, then you could possibly have a case looking at defensive
Trump
stocks.
1,000 troops to what?
I've read somewhere that Trump is moving 1,000 troops to that region.
Which region?
The Middle East.
Oh, okay. Yep. Okay, sorry. Yep. I mean, one of his cabinet members is like, he's been pounding the table to try and invade Iran for like 20 years. And he's basically in Trump's inner circle. Okay. He was one of the guys who actually orchestrated the whole Iraq invasion. Mm-hmm. So yeah, definitely. If he's given an excuse, I think you've got basically a green light that there's going to be an American invasion there. And the interesting thing is, what a coincidence, recession. They always say that the absolute best way to save your economy, if the broader economy does go into recession, is just go generate a war somewhere. And you look at almost all of the major wars, they usually happen either just shortly after a recession is declared or in that neighborhood. So what a coincidence, eh? Jeez.
Interesting. Yeah.
Anyway, sorry to interrupt. That just caught my ear when you said that.
No, not at all. But I mean, it's those type of things that happens. You have to think, okay, well, who is that going to implicate basically in 6 months' time? So you have to try and think 6, 12, 24 months forward. You can't just think, okay, this has come out now, I need to trade this. We need to be thinking, okay, so for example, if we look at a company and their earnings next year is supposed to be 10% rising, well, you basically want to look for a case, if you want to long it, you think it's going to be 30%, but obviously you need a good enough reason why. And that's where the price will then move. So yeah, so we're looking at that, and then obviously afterwards, you then want to look at how you're going to structure your trade. So obviously for level 3, you could look at options. For people in the UK, you're looking in at CFDs, but you want to look at all the strategies, and you want to try and look for the lowest risk with the highest possible return.
Just to touch on Murad's question here, how does the war affect the dollar? Usually I've found in my career that when the bullets actually start flying, like it'll actually be dollar bearish as we get closer and closer and closer, and the attentions build, and oh my God, is a war going to break out? And then the moment the bullets actually start flying and people start dying, everybody rushes into the US dollar index, because basically they're just going to place their bets with who they think is going to be the winner of the war. And that's a definite risk off scenario. So just to answer your question there, Murad.
So yeah. Yeah, so that's basically everything. So next presentation will be the Monday, 1st of July. I've double checked.
Do we want
diary.
to touch base with that beautiful chart that you do on the what is it? It's the PMIs and the all the little triangles and squares and circles.
Yeah, so the next presentation, I'm going to make sure that I've got it all there. So
okay, cool.
And then we'll go over, and then I'll probably actually look at a couple of them in more detail to see how much they have actually reduced quite sharply within the US. And then we can get a good picture again of where we are from a worldwide perspective.
Yeah, I saw a study that I thought would totally grab your attention. Question is, did I save it? I don't know whether anybody saved it, but it was a graphic on business conditions, and they said that business conditions themselves were deteriorating really rapidly.
Okay, interesting. I'll take a look.
Of course, I don't seem to have it here in front of me. It was such a cool piece. I don't know, BUS. Let's see. I doubt this is going to load up, but it might. But there was a really cool. No, of course I don't have it. There was a. Oh yeah, here it is. Yay. Okay. So people, I don't know whether Jamie, you've been seeing this. Did you see this study?
No, I don't. Business conditions, I think, is more of a coincident indicator, I think. But it's definitely something to look at. I mean, look at
Morgan Stanley puts out, Morgan Stanley's business condition index, headline index. I guess 3 MMA. I'm not quite sure what that's in. But anyway you shake it, I would imagine your PMIs are all sort of doing this same sort of thing. And we're basically falling off a cliff here. So
well, this is it. You're completely right. If you look at the quarterly earnings and you listen to the transcripts, a lot of US companies are struggling. So whether they're reducing their production by 20% or whether Chinese affecting them. So you're definitely going to get a lot of upgrades and downgrades in this next quarter. So you're going to get a lot of volatility without a doubt, because I think a lot of companies have been priced in to actually hit their earnings growth for what they think they're going to get for this fiscal year. But things are deteriorating rather quickly. So, yeah.
Cool. So we'll look forward to that in your next report. Is that what you said?
Yeah, definitely.
All right. Cool. Awesome. Okay. Let's see. Anything else? Grim posted this cool website. Not a bad, maybe bookmark this. Thank you so much, Grim. Fed rate monitor tool from investing.com. I said that they were expecting a 30% chance of cutting rates. And according to these guys, it's actually 25%. So actually, I was being generous. Thank you, Grim. Appreciate that contribution. Not a bad resource for you to bookmark. In fact, actually, I'll even do that too. We will put trading resources. Why don't we put it in news, right? So we got a nice little reference tool for you guys going forward. I might even just put this on the website. So, here's a really good sort of analogy. I think I used to tell you guys this. We used to play the currency markets just based purely on what the short rates are. And you can clearly see that the Americans are paying you a heck of a lot more than their trading partners. So another sort of interesting justification why, the US dollar is as strong as it is. It'll be really interesting. And I don't know, Jamie, are you watching what the Bank of England is thinking about doing tomorrow?
Not really, to be honest. I can't see them changing anything yet. Not yet, at least. I think they'll wait until October, post-October, and then look more at the data.
Do you follow Carney? What do you think about him? Has he actually adopted a British accent yet?
No, he has. He definitely hasn't adopted a British accent.
Still got that Canadian accent.
Yeah.
Was that my Canadian accent? That was brutal. Anyway. All right. So just bantering here. Sorry, everybody, wasting people's time. But the long and short of it here, the Americans are still paying you a premium to own their paper, relative to things like the Bank of Canada. And, this is sort of half of the reason why Canada is so vulnerable right now. Is you can really feel it in the Canadian real estate market. I don't know, Casey, are you seeing it over in Victoria? I can feel the Canadian real estate market is hemorrhaging right now. But the Canadians are kind of trapped, right? If they wanted to save their real estate market and their housing market, then they would just simply lower interest rates and, people wouldn't be worried about mortgages and stuff like that. But because Canada runs massive deficits, and basically we're bankrupt, they have to keep pace with the Americans. And if they don't, and they start, the spread between these rates starts getting too wide, then the Canadian dollar just collapse. So, if you're Canadian right now, get your shit together. And I was even joking with one of these Australians, same sort of thing. Yeah, that's right, Jamie. I was joking with one of these fishing boat captains yesterday because he got into the business back in 1980. And I said, do you feel a lot of similarities between that insanity and what's going on right now? And he's like, oh, man, it's incredible, the similarities. So even people in industry that have actually been in Canada for some time, they can see that, it got a little nuts over there, late 70s, early 80s here in Canada. Then we had to go through a really big, nasty recession that washed everything out. We're starting to see the same writing on the wall. So, just be careful, everybody. Okay, maybe we'll end the DB a little bit early. I don't know. Maybe Grim, do you have anything you'd like to add to the conversation today? I see you doing lots of fun stuff in the market. Oh, I can't hear you. I don't know whether...
Probably helps if I have my mic on.
There he is.
I don't really have a lot to add. Today's kind of a sit on my hands day with the Fed announcement. So, I'm looking at some ideas to maybe get in onto if tomorrow they still look good. But for the most part, I'm not putting any new trades on today.
That's smart. Always wise to play from a position of strength. I think Jamie's final screenshot here, right? Always look at your downside before your upside. Man, that's good words of wisdom, my friend. All right. So I thought I'd just touch base. All right. Anything else we should maybe talk about here before we leave you guys? You can see market's catching a bit of a bid heading into the event in the sort of risk on assets. Things like, maybe we should even take a quick boo at what's going on in China. We showed you this graphic yesterday of the Chinese currency falling relative to the US dollar. And I don't know whether we have anybody who's in Asia on the call, but it would be really interesting to get sort of a boots on the ground report of what the heck's going on in Hong Kong.
Oh, if I could interject about that, actually.
Sure.
So I was in London last weekend at a conference, and one of the people who was speaking, there were a couple of Chinese people there, and he asked directly. He was like, "So is everything going well in China? What's actually going on?" And they just went and said, "Oh, we can't comment." So, I mean, read into how that you want. Personally, I would have just said, "Yeah, everything's growing fine," but it can't be growing too fine if they're just saying no comment. So, yeah, a lot is.
I did, and actually, this is a really interesting parallel to you because do you remember Northern Rock?
Yes, just about.
Okay.
I was 15, so.
2007, 2008 financial crisis, that was sort of one of the warning signs that, hey, things aren't nearly as strong as you'd believe. There was a run on a UK bank. I think they were British, but I think they were operating in Ireland, but I can't remember the specifics. But the long and short of it is that there was a classic run on a bank. And everybody was like lining up for like 3 or 4 hours to try and get their money out of the bank. And the ATMs, of course, were shut down and all hell broke loose. And I think I said in a previous daily brief, we had this similar sort of thing with this company here in Canada called ABC Paper. I don't know whether Casey's here in on the West Coast. Do you remember ABC Paper, Casey? That might have been before your time. No. All right. Not even maybe, just a no. Anyway, that was back when ING was first getting involved in the Canadian market. Do you remember they changed their name to like Orange Bank or something crazy like that or something? But anyway, the point that I'm trying to make here is that I saw and I was reading articles about banks in northern China are actually starting to buckle. And there was a bank in northern China. The media really hushed it. I only saw a tertiary report about it, but in essence, it was quickly nationalized and gobbled up. But what was really interesting about that was that the credit spreads in China have like doubled since then. So clearly, there are problems underlying. And of course, we've conjectured and speculated about this. What was sort of the thing that was going to sort of the catalyst that was going to sort of tip this whole thing over? And the Chinese debt to equity ratios are just absolutely astronomical. They're just right off the map. So, maybe this cycle's catalyst is a break in the Chinese credit market. That could very easily happen. So, just a quick comment on this. Obviously, with Fed Day and all that kind of stuff, when the Americans basically, and I'm not quite sure who walked away from the table first. Was the Chinese that walked away from the table, or was it the Americans that walked away from the table? But the long and short of it is, about a month or so ago, basically the whole sort of trade deal kind of stuff just stopped. And the end result, and this is is this a political football in that the one thing that Mr. Trump wants is the Chinese yuan to be more expensive. So then that way other countries' products are more competitively priced and the Chinese aren't being perceived to be taking advantage of their sort of preferred trade status with the U.S. Or is this actually, signs of, I don't know whether I did the or correctly or not, but is this a political football that the government is playing with this to try and piss the Mr. Trump off? Look at, we're just going to devalue our currency even more, race to the bottom, that kind of talk, and there's nothing you can do about it. Or is this actually internal problems within the actual fundamental framework within China? And then also, too, and this is my personal take, is that the issues going on in Hong Kong right now are literally bringing people's that would normally have just said, meh, nothing's really big going on. It's not that big of a deal. Now they're like, okay, we got to get our money the hell out of here. And it's interesting, the direct correlation with the break in the Chinese yuan and the recent substantial rally in Bitcoin. Like Colleen was kind of asking, I see the things going on with the British pound. And the rise in Bitcoin price. Maybe that's also a contributing factor to Bitcoin, the break in the British pound, and all the uncertainties around Brexit and Boris now and all that. I don't know, but just recently we did put on this Chinese yuan chart and the Bitcoin chart. Interesting how we're potentially waffling up here, and the Chinese yuan might actually be putting in some sort of short-term bottom, now that Trump and Mr. Xi have agreed that at this G20 meeting that their representatives will start talking again. Also did see some interesting, and just be careful of this. I see a lot of sort of articles from like Zero Hedge and stuff like that saying that the Chinese and the Russians are in secret agreement to try and derail the Americans and change sort of the world order and all that. I would caution people to take all that kind of talk with a big grain of salt. I did see something that caught my attention, which is a bit surprising, but nonetheless, I think it's the Netherlands government. I'm not entirely positive. It might be EU, but I did see in particular the Netherlands have actually started a murder trial for the Russian officials and the Ukrainian officials who were in charge when that passenger airline jet was shot down in 2014. So, you never know how these things play out, but that's going to be sort of like a little jabbing point. Are those Russian officials actually going to be held to the fire? Is that going to create more tension with Russia and Europe? It's been pretty quiet lately, but so Morales here is saying, yep, here in Netherlands. So you're familiar with that? Is that getting a lot of press attention? Is it going to be something that's going to be like front page news kind of stuff? I did find it interesting, like I picked up some of my PDL here recently. Keep in mind that rare earths, a huge portion of this market is controlled by the Russians. And this is often a political tool that they like to use. And I did notice that this thing has jumped up quite a bit here recently. So maybe we might be starting to hear or see, the temperature turned up. Russia's been very quiet recently. I don't know, stuff for you to think about. But I got to tell you, I'm pretty happy about buying this stock down here, regardless. Okay, yeah, we're getting pretty close to the top of the hour. We talked about a bunch of different things. Of course, big unknown is, of course, how the Fed's going to act here today. Still think it's a very good idea for us just to let the dust settle. We'll keep an eye on things like stocks. Do they start to back off here? And also oil, I would say those two are highly correlated. And I actually think that Bitcoin and gold here are highly correlated, the ultimate fear proxy kind of thing. So, keep your eyes peeled. We might just double bottom and break out higher here. Keep in mind, everybody, that the algo actually technically is still long. So it's not like I'm actually advocating shorts here. And remember, too, that I actually would prefer that since the weekly charts are still pointing up, that pullbacks are actually buying windows for me. So I'm not really aggressively thinking short Bitcoin. What I'm thinking is if we do happen to get a dump, that might actually set up your next really conservative, simple buy window. I thought it was interesting too, and I did see tweets and stuff to this effect. Keep in mind, especially with crypto Twitter, if you ever sort of mention anything negative about Bitcoin, it doesn't get any love at all. But I did see somebody on crypto Twitter this morning, and I think they're actually a a TRIer, if I'm not mistaken. I never can get all these crypto names straight. But where the heck is it? I think I did it under likes. Somebody just put out a really simple image this morning, and I think this is so telling. It's so simple, and yet it's often overlooked. He just said unpopular observation. There's 38.2. We just basically slammed right into it, and we've stalled. So this isn't necessarily a sell signal, but what I would definitely say is that it's very difficult for us to actually declare this as a new bull market until this level has been resolved. And what you'd really like to see is some nice consolidation back and forth where, people that did buy off the bottom, they're liquidating, taking profits, new shorts come in. And so it starts to sort of even out the balance. Like right now, what I'm worried about is there's just too many people that are on the long side. Everybody's long, nobody's short, nobody's taking any profits kind of idea. Nobody's been spooked. And so this trade is actually getting a little bit crowded on the long side. So if anything, what I'd like to see is a little bit of back and forth, maybe create like a really kick-ass, like inverted head and shoulders. Wouldn't that be cool? Right? And, you see how deep this pullback is here. Maybe we pull back into these areas. And like I said, off the weekly charts, you can see where 38.2s are. You can see where 13 EMA is. Maybe pull back here a little bit. And then that sets up a really cool head and shoulders, which of course can take us up into these reload zones down the road. So that's sort of what I'm seeing. And I think it's pretty important that we just keep an eye on Mr. Barbecue's level here, because I don't think we're done resolving this. I think we're just now starting the resolution process. Okay, that is the top of the hour. So what do you think, Mr. Mayor? Did we give these people some half decent value today?
Yes, sir.
Excellent. Love to hear that. Thank you, Grim. Grim just posted also in the lounge, Morgan Stanley Business Conditions Index. The index is an economic barometer that is based on the internal monthly canvas of Morgan Stanley and companies' industry analysts. So way to keep us honest there. Did you want to add something, sir?
Yeah, I was just going to say, I haven't been able to find a direct link to show us the chart for that. I'm sure it exists somewhere. If somebody else finds it, please post it out. Otherwise, I will post it when I eventually do come across it.
Yeah, this looks like it's a very internally kind of generated document of theirs. So yeah. I doubt we're going to be able to get that chart. But yeah, there's Jamie says probably. You're probably right, Jamie. Source Morgan Stanley Research. So if anybody's got an inside beat on Morgan Stanley Research, maybe you can sort of quietly sneak that over to us. Okay, why don't we leave it at that for today? Thank you so much, everybody, for your participation. Great stuff, Jamie. Love the update. Everybody, I sure hope, if you need to, rewind the video and go back and grab a screenshot of that awesome analysis of Bitcoin and the difficulty changing, the halvenings, and the different colors of sort of different phases of the market. Love that stuff. Hugs and kisses. Thank you, Grim, for helping me out here a little bit today with a bit of commentary. Thank you, Alex, of course, for driving the bus and keeping us on course. And thank you, Kevin, for showing up for your tutorial. All right, why don't we leave it at that? Have yourselves a great day, everybody. All the best, and bye for now.